Today we are honored to welcome Dimitre Genov on Balkan Beginnings. From being among the select few to secure a spot at Harvard University with the George Soros Open Society Foundation Scholarship, to diving headfirst into the thrilling world of Wall Street's investment banking and now conquering the realm of portfolio management. Dimitre Genov has truly achieved the American dream, and in 45 minutes you will not only feel more driven, but you'll also gain a wealth of insights from Dimitre's incredible journey that can propel you towards your own dreams and aspirations right here on Balkan Beginnings. Welcome to the show, Balkan Beginnings. We have our second guest on episode number 2, Dimitre Genov. Welcome.
Hi, Matt.
So the name of our podcast is Balkan Beginnings. So tell me what your Balkan beginning is.
Well, I'm originally from Bulgaria. I grew up in a small town on the Black Sea called Varna. My passion as a young student was math. I attended a specialized math high school, did go to a number of math competitions, which helped me later on in life as I was choosing my major and my profession. In life, timing and luck are very important. And for me, I was very fortunate that I finished high school in 1989 when the Berlin Wall came down. At that point, opportunities opened up for students like me to go study abroad, travel abroad, and I took advantage of that. I heard about a foundation sponsored by George Soros that was offering scholarships for students like me who wanted to go and explore the world. And I applied for that scholarship, which helped me later on reach out to a number of schools in the US. I sent applications to many, many schools here in the US and was fortunate to be accepted at Harvard. Graduated from there in 1994, which unquestionably was a life changing event for me.
So speaking on the page of life changing, so you came from Bulgaria, and before the Berlin Wall fell, obviously it was a time of kind of a communism, socialism type of society, and then you come to the US and it's this whole different change. What was that contrast like?
It was a big contrast. First, growing up in a different world, completely different world, with different sports, different music, different, just in general, goals in a society. So I was overwhelmed, unquestionably. Um, but this is something that every foreign student goes through when they arrive in the U.S. So I found sort of company in many other international students that are on campus, and we're kind of learning and getting integrated into the American culture. Over time, we certainly were able to, be more involved and find friends. But in the beginning, you kind of feel overwhelmed, from kind of the newness of the environment.
Hmm. So when you were at Harvard for undergrad, what would you spend your time doing? What were some of your hobbies outside of schoolwork?
Well, school was definitely challenging, so there wasn't a lot of free time. I liked sports, still like sports a lot. I swam on campus. I took foreign language classes. That was another passion of mine. I was interested in learning about foreign cultures. I was part of the German department, so I studied German, took a lot of classes on German art, German culture. Did have to work a little bit on campus. Was actually a bartender, which was a very fun job and a way to learn about the world outside of the campus. I went to various events, weddings, birthdays, New Year's Eve parties that I cater, and I was a bartender, and that was a great experience to get immersed in the culture and see how the rest of the world outside of the campus lives. So a lot of different things. He was very busy. I used to write to my parents that I needed 8 days in a week to be able to do everything I wanted to do. But it was exciting and it was a great experience to learn and get new skills.
So, tell me about what you majored in. You said you majored in mathematics and business.
I started as a math major because that's what I'd studied in Bulgaria. I spent 2 years in university in Bulgaria before I transferred to Harvard. And so I was able to get some credits for my work. As time progressed and I got interested in business and the world of finance, I started taking classes in economics as a way to become more appealing to potential employers. So my math major became applied math, and by the end was applied math and economics.
So, using that major, did you do any internships over the summer to kind of expand into that whole industry, or what? Did you do anything?
Yes, as I mentioned, I had interest in German and was part of the German department there, which had excellent relationships with potential employers and banks in Germany. That helped me get an internship in Frankfurt. I spent my junior summer working for Dresdner Bank, which at the time was the second largest bank in Germany after Deutsche Bank. It doesn't exist anymore, but it was a fantastic experience. I got to improve on my language skills, got to work on very interesting projects, spend time with people from all over the world. It was an unforgettable experience and really the launch of my career in finance.
So, speaking of your launch into your career, so following after that, when you graduated and got your diploma, what were your plans? Were you thinking about maybe going back to Germany or Europe, or did you want to stay in the US? How did you decide from there?
I did get an invitation to go back to work for Dresdner Bank. I seriously considered it because I enjoyed the experience so much. However, most of my friends and classmates were going to New York. A few went to London. So I felt being in a bigger center was probably a better place to start your career. And I applied to a number of investment banks, a few consulting firms, which at the time was the most popular options for graduating students. And I ended up getting a job with an investment bank called Lazard. And that's where I started my investment banking career.
Cool. So, did you live in New York at the time? Did they like sponsor your housing, or did you have to go and get funds for that? What did you do from there?
Fortunately, investment banking salaries were good and still are good.
Yeah.
So I was able to afford, my own apartment. I did live in New York. I moved to an area at the time that was not as popular, but now has become a very popular place, Gramercy Park. And yeah, so my career started in New York, but worked for a very international bank and did continue sort of my interest in the world beyond the U.S. And so managed to work on a number of cross-border international transactions.
Cool. Tell me about working as an analyst towards the beginning of your career in investment banking. We all always hear about these crazy hours that you guys have to work. Can you kind of just walk me through, for at least from what you remember, what a day in the life was for you back then?
The long hours are not a myth. That does exist in investment banking. It's unfortunate, but on the other hand, it's necessary for people who don't have experience to get up to speed very quickly. The typical day, you don't start as early as you would if you were in a sales and trading desk. I think normally you would start sort of 8:30, 9 o'clock in the morning. You get there, usually is a amount of work from the day before, night before that you have to finish. But the typical day of the analyst center around financial modeling, information gathering, processing that information, putting it together in a coherent format so you can present it to your team, your superiors, and eventually to your client. So the analyst's job is more initially more focused on quantitative analysis and information processing. And as you progress and grow into your career, you get to do more qualitative aspects of the job as well as have some client interaction. The hours are long because the analysis that goes into putting together a presentation is rather comprehensive, robust. At the time when I started working in the mid 90s, we didn't have a lot of the databases and software help that currently analysts have, like facts that you can press a button and download a model. We had to do everything manually. So that slowed down things even more. However, I am not in investment banking anymore, but I do hear that despite all the automation and all the help that analysts get these days, the workload is still pretty heavy.
Hmm. How did you transition over from investment banking to what you do now, portfolio management? Can you kind of walk me through how were you able to do that transition?
I spent about almost 11 years in investment banking. Most analysts usually when they finish with a 2-year program, end up going to an MBA, do an MBA, or move to private equity, hedge funds, or industry in general. I enjoyed what I was doing. I was offered the opportunity to stay on, and I did. As you progress in your career, as I said, you start doing more qualitative aspects of the job, more client interaction, more trying to procure business for the firm. So there's an element that it was a bit more salesy, if you will. It's a complex sales job, but nevertheless, it does require kind of you to have that affinity towards that type of work. I realized that with my more quantitative background, I loved reading, analysis, digging into industries, digging into financial models, finding opportunities. And perhaps inside of me, there was a bit of a risk taking mentality. I found myself drawn to reading books about investors, not about bankers. So after 11 years, perhaps a bit too long, I decided that the investment world is more what is fit for me and what I like to do. So I did do an MBA while I was working at Lazard at Columbia. I did an executive MBA and took a bunch of classes on investing. Columbia is known for an amazing value investing program. I did a senior thesis with a well-known investment manager who at the time actually was at Lazard. He has his own firm right now. And so that catapulted my career and decision to move to the buy side or the investment side, if you will.
Cool. You talk about investing. We all know that Warren Buffett's saying of being fearful when others are greedy and being greedy when others are fearful. Was there ever a moment where you were greedy when others were fearful and you're able to find opportunity in the investment world that others couldn't find?
That is true. I mean, some of the most exciting and rewarding opportunities that I've had in my career have usually come after a big crisis. In '09, was probably one of the most difficult and challenging markets that I've experienced. There was a lot of interesting opportunities. Banks were virtually decimated, after the crisis that had occurred, in '07, '08. So there's a lot of interesting opportunities in that sector. There was some cyclical companies that were benefiting from various government subsidy programs like cash flow clunkers, black gold. That in addition to the normal recovery that you experience post a crisis, recovery in economic conditions, recovery in multiples, recovery in earnings, there was this additional secondary tailwind from the government that helped such companies. And so I was able to capitalize on that and make some large investments, some large bets that paid off quite well after that crisis. Similarly, post COVID in 2020, with interest rates being close to zero or at zero, there's some interesting opportunities, and that was another great year for me. So yes, that saying is true. Not everybody takes advantage of that. The human psychology is such that after a rough period, you are more timid, you're more cautious, but usually that's when the best opportunities arise.
Cool. Uh, what was your experience like during also the dot-com bubble, a little bit before that, in the investment banking scene, not the portfolio management scene? What was that like?
I was at Lazard. I was not in the investing world, still a banker, so not as close to the markets as you are if you're a portfolio manager or an analyst in a fund. But it was something that impacted everybody. And what I noticed that some banks at the time, perhaps that's more anecdotal, were looking to change the culture and make it a little bit closer to the emerging new culture of the dot-com technology world, where people could go to work in jeans and work flexible hours and do enjoy the potential benefits of a startup that can be very successful. So what I noticed at Lazard is that they were starting to relax some of the dress code, and you would see people come casually on Fridays. There was also a venture capital fund that was launched within the firm that allowed people to invest and capitalize on these trends that were occurring in the market, invest in internet companies, in dot-com companies, etc. That helped stop some of the brain drain. We certainly saw um, a, a number of people opting to leave banking and go to the technology world. So, kind of offering these additional incentives was a way to create a similar environment and reduce that talent departure rate. So, that's just something that I experienced at the time. In terms of activity, we did enjoy all the boom times before '01. After '01, there was the bust, and so activity subsided. So that was kind of another element that I saw. There was some layoffs, lesser activity, etc. So I did experience that boom bust on the investment banking side, but from a different perspective.
Interesting. Okay, so many of our viewers are quite young and they're trying to get into their careers. Just a figure from the recent year is that getting an internship on Wall Street has never been more competitive. 1.7% acceptance rate for JP Morgan and 1.5 acceptance rate for Goldman Sachs. Out of that small percentage that you have seen working in your field, what are some common personality traits and just work ethic patterns that you've seen amongst that small percentage?
I think the key is interest and passion for the job. If you're going to be working long hours, I think you have to be very, very decided that's what you want to do, and also be passionate about this type of work. The typical analysts that I've seen that gets chosen to do an internship are people who have read a lot about the industry. They're excited to follow trends, to follow transactions, to speak and seek out advice, to look for friends, build a network in the business. So showing that passion and interest in the field, I think, is very important. From kind of personality and skill set that is required, I would say being quantitative is important. It is a job that requires financial modeling, processing information. So people with more technical quantitative skills tend to do better at that. And lastly, you're working in teams, you are supporting clients, and so being personable, having that sort of client relationship management aspect to your personality, I think is important as well. Um, that's also important and something that you need to demonstrate in the interview process. As people want to work with people, they want to be around. So these are some of kind of the key highlights, I would say. And, a bit of luck, there's definitely, being able to develop relationships with investment banking world ahead of time, maybe through alumni network, through, friends or family, certainly helps in landing those internships.
Right. Another interesting thing, kind of from my opinion, at least, I think some people tend to go into certain industries just because of what they see online or what they see on TV. Like, you have Suits and you want to become a lawyer after watching it, or maybe some ways that Hollywood can depict Wall Street. From what you've experienced, is there anything that's even somewhat true from what the movies show?
There is definitely glamour to the world of finance. There are people who have made a lot of money, and that leads to buying fancy cars, big houses, yachts, planes, etc. But that's true for any industry. The technology industry is no different, or people in the real estate world who have done well have been known to do that as well. So that's more of a personality thing. In general, flaunting your wealth and your success is something that may hurt you over time. We've seen plenty of examples where that kind of can work against you. Hollywood tends to make things more exciting, not portray the real picture. Are there people who do that? Of course there are. That's true for any industry. But, if you're to go today to Goldman Sachs or JP Morgan, I don't think you're going to find a bunch of Ferraris or Porsches being parked outside of those banks.
Right. Kind of present day. So some people like getting to investing. I know Robinhood, for example, has never been more popular amongst young investors. Um, if you were to start with $1,000, what industries would you be bullish on right now or bearish?
I mean, I'm excited about AI, and that's not something new. There's a lot of people that are talking about it right now. But I think it has the potential to change a lot of industries. The amount of efficiency and productivity that can be introduced in companies, in products and services, in our data lives, I think is huge. So any company or industry that can benefit from that, I would certainly be an investor in. Clearly the technology in sector is a great beneficiary of that, but there are others. Industrials, I think, will benefit a lot with more automation. We're seeing some amazing, advancement in the world of, robotics, autonomous driving. And so I think these are areas that I'll definitely be looking for investment. The healthcare world with aging population, we've seen what two amazing drugs, Ozempic and Manjaro, are doing to, the world of obesity. So that's another area which will be very exciting. So industrials, healthcare, technology will be areas that I'll be particularly sort of excited about and look for ways through proven leaders, not necessarily speculative companies, but proven leaders in these fields that I'll be betting on.
Okay. Kind of just more on the flip side of things, a bit more present day market. Within the last year and a half, we've been speculating a recession, and one interesting headline about this week was about the TLT ETF that represents the bond market. It's down 50% from its 2020 highs, and it's never had higher volume on record. What are your thoughts on that? Could that be a potential trigger point for a recession? What do you think?
Well, the reason why the bond fund is down so much, there's several reasons actually. One obviously is higher rates. We've gone from zero rates to over 5% in the Fed funds. That has caused this carnage in the bond market. The bond market acts is in a way as a policeman, and currently, that asset class is not happy with the excessive fiscal spending. There's trillions of fiscal deficits that have to be funded, and through the issuance of Treasury, and there's not enough demand that can meet that. We're seeing foreign buyers that traditionally used to hold treasuries are now more of the sellers. So all of these factors are impacting the bond market, and as a result, interest rates are rising. Um, Higher rates means more difficult access to funding, to capital, which is effectively the juice that the economy needs. Every industry needs funding. Interest rates are the cost of money. So when that input is a lot more dear and difficult to procure, you are going to have problems. And industries that are particularly dependent on external markets and external funding are suffering. We're seeing that in commercial real estate. There's other issues that are plaguing that sector, such as the hybrid work. But generally, higher levered industries are certainly suffering, and they're going through their own recession. On the other hand, we're seeing other sectors that are depending on consumer spending, such as hospitality, leisure, travel, is doing very well. So it's hard to paint a picture where the whole economy is impacted by this. It's probably more parts of it that are going through their own rolling recessions, if you will. And I think that's probably the ultimate outcome, that we're going to see parts of the economy going through problems, but overall we'll probably hang in there, until rates kind of plateau and start moving down.
Great answer. Another question that our audience that would be interested in breaking this industry might always contemplate or almost um, have this sense of fear when it comes to not being able to attend those top 25 target schools that are always so talked about into breaking into the world of investment banking, since it's never been more competitive. As someone who's been in the field for so many years, is this really true, or have you seen people that have come from smaller state schools that have also just done just as well?
Absolutely. I've worked in a handful of different firms. I've worked with hundreds, if not even thousands of people. Yes, if you come from a top 25 school, you may have a few extra doors open to you, but it doesn't necessarily mean that people from other schools cannot get in. In fact, I've worked with a lot of people who didn't attend these, elite institutions, but have had amazing careers on Wall Street. From state schools, people who even go to school in the U.S. And have made great careers on Wall Street. So I don't think it's a necessity. I think perhaps it is something that you need for your first entry, your first job, but once you are in the industry, you can demonstrate your passion, your skill set, your creativity, and that can propel your career. So um, it's not a necessity. I've seen many people who've come from other schools that have done really well in the industry.
Very interesting. Let's shift over a little bit to present day. So, what are some goals that you hold, or some ambitions, or what do you want to see yourself achieve?
I've been in this business for nearly 30 years. I still love it. I'm passionate about it. Would want to do it, for as long as I can. Even now I've tried and experienced different things, there's more to learn. And I think that's an important aspect for anybody who is looking to be in this industry. I think continuous interest in learning, exploring new things is definitely an important aspect.
Interesting.
So I want to experience more, learn more, try new things. Always passionate about investing. So that's on the professional side. Personally, I'm more and more involved with my kids' education, all the charities and work they're doing in their schools, and that's something that I enjoy quite a bit. I can provide them with guidance, feedback, assistance as they kind of growing up and getting into the adult world. And I enjoy my free time whenever I have free time. I love sports. I like healthy living, so I'm quite active. Wellness. I love exploring the world. As I said, I speak four languages and
Oh,
have
wow.
traveled and lived in different countries. So that's still a passion of mine. So whenever I have the time, I love to visit places that I haven't been before.
Cool. If you could pick any career, I know as much as you love working in the finance field, if you had to pick something else, like say tomorrow the finance world did not exist anymore, what would you pick?
That's a tough question. I considered being a math teacher or a math researcher. In fact, that was a plan before I came to school in the US.
Oh, wow.
So that's something that I enjoy quite a bit. I love when my kids bring home a challenging math problem that they haven't been able to solve, and so we do it together. So that's probably an area that I will be involved in. And it's not too late. I may still do it. Become a math teacher or math professor or something in the world of math. I enjoy it. It's such a pleasure for the mind finding a puzzle, a problem that you haven't solved, and you just are looking for a potential solution. So maybe that would be the alternative to finance.
Wow. Very cool. Well, it was a very inspiring story, Dmitry Genov. I was super impressed, inspired, and yeah, thank you so much for coming on to the podcast.
No problem, Matt. I really enjoyed it. Thank you very much.
Thank you.